Well, glad to have you back. Now, away from Lagos now. Nigeria's trade relationship with the United Kingdom has long been a crucial component of the country's economic landscape. However, recent data shows Nigeria's trade with UK declined by 25%. That's in the first quarter of 2024. Now, this significant decline in trade volume has prompted a closer examination of the underlying factors driving this trend. Let's get straight talking. And an economist and research professor, Dr. Andrew Nevin, a friend of the house, joins me from the United States to continue this conversation. Good afternoon, or good day to you, Dr. Nevin. I think it's morning over there, and thank you so much for joining us despite the time challenge and all of that.
Oh, totally, my brother. It's always a great pleasure to be with you.
All right, then. This report, let me ask this way. The decline is what everyone is worried about. It's concerning looking at what we've seen with these figures, what we used to have and what we have. In your thoughts, despite the fact that we have a slight depreciation of the Naira, we still have this challenge. What could be responsible for this?
Well, I'm concerned about the UK trade relationship, but not necessarily for these numbers. I mean, the numbers jump around on that. And, of course, we export, in terms of goods, we export oil to the United Kingdom mainly, and then we import a number of different things, including financial services, professional services, also some machinery, as the report shows. Those numbers are going to move around on that. So I wouldn't be alarmed by these numbers, but what I am alarmed about is the deterioration of what is the most important relationships between the United Kingdom and Nigeria in economic terms, which is us sending students. So when students go from Nigeria to the United Kingdom, they spend their hard-earned money to get an education there. That is an import from Nigeria, or an import for Nigeria, and an export for the United Kingdom, and that's a huge relationship. But then that's balanced off somewhat by the fact that we have, of course, a large diaspora working in the United Kingdom, and this relationship is really under strain. And one of the reasons for it is, two reasons. One reason, of course, is the exchange rate, and there are a lot of students that have left Nigeria to go get an education in the United Kingdom, and they're really struggling because of the movement in the exchange rate. Some are having to drop out, and they're under financial hardship. They're losing their visas, so they've invested a lot of money, but they're not going to get a result. And the second thing that's even maybe more worrying is what's happening, particularly with the UK election right now around immigration, hardening immigration. So there's the suggestion, for example, that people, students who come from Nigeria and get a degree in the United Kingdom would no longer be able to work for 2 or 3 years. Well, then the attractiveness of going to the United Kingdom much diminishes. So I'm really worried about that concern. But the quarter-to-quarter movement in the measurement of what is essentially goods trade, I'm not so worried about.
Improving these trade relations, in my thoughts, would be if we intensify efforts aimed at diversifying our economy. Do you think that we could have more to offer as a country?
Well, I think the two areas that are of interest, it's really three areas to the United Kingdom. I mean, one, of course, is we should be exporting more agricultural products. They're unique agricultural products that we all know about, cassava, groundnuts, cocoa, for example. And we know we've struggled with getting the certifications right and exporting to Europe, but we should continue those efforts because we have an advantage in those products. And we should continue to export people, and of course, people that move physically to the United Kingdom, but even more importantly, as I've talked about for years, people that work remotely and work in the United Kingdom and serve the United Kingdom. So companies like Outsource Global, which I've talked about many times in Amalas, and has some clients in the United Kingdom, and that can be built up. So we can build up those exports. The education component, so that is the import of education by Nigerians to go to the United Kingdom, is still important. But as I said, the declining exchange rates really created pressure on that. And of course, we share the love of football. We're exporting, of course, Nigerian football players to the United Kingdom. I'm not sure the numbers on how much Nigeria earns. I think Brazil earns over $1 billion a year for transfer fees. The country of Brazil earns $1 billion of the transfer fees of Brazilians into the European League. So I'm not sure if we've started to measure that or track that. Of course, we've got Saka, who's a Nigerian, who's a star for England right now in the Euros on that. So that is an important, not just football and sporting relationship, it's also an important economic relationship between the United Kingdom, or particularly England, and Nigeria.
But naturally, make us understand, of course, as an economist, a weaker Naira should make our exports cheaper. and, of course, more competitive internationally. But that is really not happening.
Well, I mean, I don't think the price is necessarily the issue. I mean, we have a comparative advantage in producing cassava, for example. The issue that we face is getting the certification. So when the Naira depreciates, that's not helping us immediately with the export of agricultural products. The market is there for us. We have the best growing conditions for many of these crops that the world wants, that we've enumerated, but we don't have the certifications to go into Europe. And I think, I'm sure everyone listening on this program has read articles where we've had crops that were meant for export that either didn't pass certification or they got stuck in transit and essentially rotted to a value of zero, and that's a terrible thing. So I wouldn't focus so much on the exchange rate. I mean, we are not, we already have a very low exchange rate. More devaluation is not of any help to the country. What's of help to the country is solving some of these kind of foundational issues. In the case of the agricultural exports, and I've been consistent, we should be exporting grains, and we should be exporting hydrocarbons, and we should be exporting agricultural things. Those are the three things we have a comparative advantage on. But we still have the challenge in agriculture and meeting the standards that are required. So, but there are efforts. So, for example, Edo State Governor, you're creating processing zones where the farmers aggregate their products. They're able to meet the standards in a single warehouse. An individual farmer obviously can't meet these standards on that. So that's where the focus should be, not on this depreciation. Depreciating, for example, I'm Canadian, as many people know, and we always depreciated to be more competitive in the United States, but that was a depreciation from 75 cents to 70 cents. Canadian dollar to the U.S. dollar. That's not going to help Nigeria. What's going to help Nigeria is focusing on these fundamentals. And in agriculture, that means getting the proper system for certification. So Europe in particular, including the United Kingdom, which I still count as Europe, can import Nigerian agricultural products seamlessly.
Well, it seems like the country, that's Nigeria now, still remains very attractive to investors. As we speak, President Bola Tinubu is still in South Africa after the inauguration of the president for second term, and bilateral relations and, of course, discussions around how to strengthen ties have been on the fore, and everyone seems to still be interested in partnering with Nigeria. What is that thing that you think makes international foreign investors still take Nigeria or want Nigeria to be their partner?
Well, I mean, but the truth is everyone is interested in Nigeria. We understand because of the scale of the Nigerian economy, the dynamism of the Nigerian economy. But the truth is, I mean, back in 2016, 2017, I used to speak a lot about the investment gap. I think the number we had at the time was $50 billion a year under investment. We needed investment that was close to 30% of GDP to get enough growth to absorb all the new people in the labor market. We haven't got that investment. I mean, we were talking a little earlier about the $3.5 billion from Afam Bank, which is fantastic, focused on CNG and on the textile industry. That's a good step. But as I said, the gap was $50 billion. And what we've seen is disinvestment by multinationals pulling out of Nigeria. So they're interested in Nigeria. We continue talking. We just had a major conference here in Dallas, Africa Investment Conference. A lot of interest in Nigeria. But the money's not coming. It's not coming to the oil industry where we've underinvested. And we've had, of course, the oil theft, the crude theft, and the losses. So we've had declining production, which has really created exchange rate problems and dollar shortages. We haven't got the investment in the gas infrastructure. Today there was an article about the gap. I think it was Africa over the decade needs about $200 billion of gas investment, but is only getting about 10 or 15 billion, and a big part of that gap is Nigeria. So people are interested, but we haven't created the conditions yet to get the sufficient investment. So we need to take the steps to get that. And I really think the new administration, well, not so new now, it's over a year, needs to be asking itself. I was one of the people who was very happy with the change of administration because we obviously had suffered from massive underinvestment during the previous two terms. And yet, when I look back at the last year, I can't say there's been a major increase in investment, even though, as you say, there's United Kingdom here in the United States, here in South Africa, or in South Africa, there's great interest in Nigeria, but we haven't quite got conditions right that people are going to actually put down their money. So they're going to continue to stay interested, but we need to do a bit more if we're actually going to get their dollars to flow into the country.
Also, sometime this week, we heard in the news that the federal government has sealed a $3.5 billion deal with Afam Bank. What is specific here to me, or what is really significant here, is the fact that the focus is on textile industry, CNG vehicles, and others. It seems like government is taking the diversification agenda more seriously. Your reaction to this?
Well, I mean, I'm always happy to say Afam Bank investment because their processes are very robust and, they're very, very good at this. But of course, the question is what the country does with the money. I mean, we've had so many, you take an example, the electricity metering program. I mean, the government arranged for investment in that, I think, from the World Bank, and that ended up being a failure. And of course, we can list out many failures of investment. So the question is, what's the execution on the ground? Now, when Afam Bank is involved in it, I think it makes a lot of sense because, as I said, they have very robust processes. I mean, it's obvious that we should have, the country has had a very robust textile industry. We can return to a robust textile industry, but of course, as we build that up on this investment, people are going to be asking, in particular, where the power comes from. So if you don't solve the power problem, it's very hard to have a competitive textile industry. But I think it's a good step. I think in terms of actual on-the-ground execution, it would go faster with the CNG. That's an obvious thing. We have the gas. It makes a lot more sense to power vehicles with CNG in the Nigerian context than with PMS on that. So hopefully that's structured in a way it can go quickly. So I think it's good news. But again, it's the execution. And we don't want more failed projects in Nigeria. We're all aware of how many billions, tens of billions, hundreds of billions have been wasted over the years on these sorts of investments that haven't produced a return for the nation.
Let me take you back to some of these reforms that we've talked about before now, and which is what many economists have clamored for. That's, of course, the popular one is subsidy removal and the foreign exchange market. Though there's been a bit of stability in the foreign exchange market, many still say the Naira seems not to be appropriately priced. So let me ask you, the fallout of all of these reforms that you've seen and heard of, how would you assess government's initiatives aimed at addressing the fallout of some of these policies being instituted by President Bola Ahmed Tinubu?
Well, I think that we were optimistic a year ago. I mean, I was in the camp that said, look, the PMS subsidy is essentially a form of corruption. Many others were saying similar things. It was removed. But, I mean, we all know now, in fact, it was removed, but now it's been reintroduced. And it's creating problems in the country because when you have this subsidy required by NNPC, if they don't have the liquidity, I mean, first off, you still have this incredibly inefficient, corrupt system when you introduce the subsidy. Secondly, because NNPC is squeezed for funds, they don't always have the liquidity to be able to get the PMS. So the PMS, my understanding is the Dangote refinery is on stream, but they don't want to put their PMS into the Nigerian market because of the way the subsidy regime works. I mean, I thought the thing was pretty simple. When you look around the world, I mean, gasoline is one of the easiest markets in the world. It should be highly competitive. I mean, like other forms of hydrocarbons are. And the idea originally, of course, was NNPC, not NNPC, but the country would allow anyone to import you had to have a license and follow business practices, but you could import PMS. Still, NNPC is the monopoly. We've reintroduced the subsidy, so we're getting the worst of all possible worlds on that. On the exchange rate, in terms of the mechanics and the way it works and market discovery, that's improved. But as I've said before in this program, and I said a year ago, what's going to make it work in the short to medium term for Nigerians is if there's more dollars. But where are those dollars going to come from? They're not coming from investment right now. They're not coming from those agricultural imports. I've talked about the export of services, but that takes time to build. So the only thing in the short term that could create the dollars is the particularly the crude oil sales. And of course, we dropped down to 1.2, 1.1, I think 1.0 in one month last year on that. So that's been a real problem and really created that. I mean, if we were producing a lot more oil, we would be able to stabilize the exchange rate at, its market level. I think CBN governors come out, I don't remember the last number, maybe 800 to 900. That seems like the level it should be at for me. But to do that, we require the hydrocarbon increase in production of oil, and that hasn't happened on that. Though I did hear that for the last month that the statistics is 1.7 million barrels, so maybe we'll see some relief on that. But very disappointing on the reintroduction of the subsidy on that. And you go back to what the the Labor Congress is saying. I mean, there was a headline today about the possibility of 150,000 naira minimum wage, in the civil service. I think that makes a lot more sense to me to pay the civil servants better to reflect what's happened with inflation than try to continue the subsidy. And we all know too, those who follow this closely, that when the subsidy was removed, I said this for years, other economists, immediately the flow of funds to the federal government, the naira flow of funds, and also to the state and local governments increased dramatically. But again, that's being pared back because of the reintroduction of the subsidy. So I think it's a step backwards on that. But the stability in the system could really be enhanced if we just produced a little bit more oil. And it's completely opaque to me. I've said on this program before, we had a major audit of CBN after the change in administration, and yet it seems to still be completely opaque what's happening at NNPC, which is the most valuable asset of the Nigerian people, and I think they should be asking themselves, why are we not getting value for the NNPC? As I said, particularly right now, we're in the transition to, grain exports, service exports, transition to industrialization. We need to have the stability in the exchange rate. I mean, if we want power, for example, industrialization, we need to import that machinery. It's going to be paid for in U.S. dollars. So we need a stabilization of the exchange rate. And the only thing that can do that in the short and medium term is increased oil production and transparency about the flow of funds from the NNPC.
I think we're going to wrap up on that note. You touched on it on one of your submissions, talking about subsidy removal and reintroduction. Government has said they've not agreed to this, but many analysts are saying this is happening. In your understanding and considering the exchange rate, what should be maybe the appropriate price for PMS? Some say it should be almost the same with the price of diesel. So does it mean that there's a kind of intervention going on at the moment? What do you think?
Well, just as I said, I think what's happened is, you don't have to be an economist to do the mathematics of how much oil costs in the world market and the gap between the diesel price and PMS price now in Nigeria. So it's obvious that the NNPC and the government have reintroduced a subsidy without being open about it. As I said, that's a big part of, I think, the challenge is the governments refuse to be transparent about what's happening at NNPC. So the subsidy's been reintroduced. There's been some denial by the government. Other officials of it, I think, in a way, kind of hinted that it's back, and it's creating problems. I mean, as I said, I think we would be much better off, speaking with my economist hat, much better off, raising the salaries of civil service workers. 150,000 seems like a good number to me, and being honest about the PMS, and also having multiple, a competitive market for PMS, so have multiple importers of PMS, have Dangote start to be willing to put its PMS into the domestic market. That doesn't necessarily bring down the price a lot, because it still depends on the world oil price and the exchange rate, but at least gives some stability to the market. People know how it works. But we've arrived in the worst possible world where we promised a subsidy removal and then reintroduce it through the back door, aren't open about it, people don't know what's going on with the PMS price, and we're causing some shortages, which is, again, very painful from an economic viewpoint, because every time there's a shortage of such a critical commodity, it reduces our GDP.
Indeed, it's true. That's a good way to live it. Dr. Andrew Nevin, I must thank you so much for your time. Always nice having you join the program, making sense of all of these topics thrown out today. Dr. Andrew Nevin is an economist, research professor. Thank you so much. Do enjoy the rest of your day, and hope to see you again soon.
Thank you, Brother Tola. I miss you.
Same here.